Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Lastly, I'll be looking at the comments and responding for the next 3 hours after this video is released. If you want to chat, but you couldn't get your comment in within that time frame, feel free to reach out to me on Twitter. I'll put that in the description below, or email me. Thanks. All right, everyone. Well, we are during the weekend before the trading week of August 9th. We're going to take a look at Viacom today. And normally I would take a look here on the daily chart, but go back. If you're not familiar with what happened in March, it's a ridiculous story. It's a crazy thing that happened that dragged Viacom down here. It's worth looking up. I'm not going to go through it in this video, but that's also to say this won't do us much good. So I'm going to go ahead with the 3-month chart and just basically talk about where we are. I might pull it back a little bit, but it's just that it's sort of like in a weird position between 3 months and 6 months, grabs too much of this movement for my liking. So I'm going to go with the 3 here, and we're going to do a chart analysis, and then we'll do a quick check-in on the data and see where Viacom might be heading. It's had few really, really, I don't know if I was going to say painful, but it may not be painful swings, but some crazy volatility lately, which I know for a lot of folks can be a really good thing. But I think it's worth charting some supply and demand zones to start with. So if you're not familiar with how I do this, basically I look at areas that encompass previous support, okay, and basically look for it to continue to hold in those areas, and then look for areas that encompass previous support and resistance. So you see resistance here, support, 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 resistance, resistance. Those are the strongest zones, the ones that have previous support and resistance. So if it comes down, they are typically the ones that will hold up the best to sort of like the pricing pressure that they'll encounter. Drag this up a little bit, but all of these price zones are basically, if it's sitting below the current price, like all of these would be areas of support that I'd look for. Obviously there's one in here too. I was going to say there's a big drop zone there, but it actually, there's an additional, you see all this support, resistance, and support and resistance here as well. So there's a zone there at 40. So there's a bunch of stops basically on every dollar to the downside, and potentially the upside we'll see here in a second. But that's not actually that, I mean, I know it feels like it's tight in because of it just being a dollar spread, but when the stock is just trading in the 40s, that's, you know, if it were to gain a dollar, it's a pretty decent return in a day. I don't think you'd scoff at being up a dollar on a $41 stock. So these are the price points that I would look for. Basically a bunch of stops along every dollar marker along the way, but basically the way that I look to play these is twofold. So one, I would look for any of these bottom zones as potential dip buy zones. So if the price does start to come down, oh, sorry if that was loud, I just bumped the mic, but if the price does start to come down and shows some price strength along any of these down price targets or demand zones, then I would potentially think about taking a dip buy there. Of course, if it's supported by other factors as well. And if it comes to the upside and it starts triggering or hitting a bunch of these zones and turning them from resistance into support, and then going on to the next one and flipping it from resistance to support, that's what you'll see as these go along the route here. It'll first start hitting it as resistance, and then if it can overcome it and develop it as support, then it'll make the run at the next price point. And in that case, I would play it a couple of ways. One, if I have a position and I'm looking to kind of start to lock in some profit or take some off the table, then I would start to trim at some of these upper price zones. And or if I don't have an existing position, but I'm looking to buy into price strength, I would do something like this. I'd look for it to rise up and hit a resistance zone and then pull back into a support zone below it. So I say, okay, if this can make a run at 43 bucks, then I think Viacom is actually showing some good price strength and maybe has some potential for a longer term upward run. And in that case, you know, every time a stock moves up, it's going to pull back in some way, shape, or form, or to some degree. And unless the chart breaks or until the chart is no longer valid, I would look for it to pull back into a charted demand zone. And then I would look to potentially pick up my buy here. So I'm buying into price strength, but on a dip in overall strength. Of course, making sure that my indicators are in line, that there's actually like the candlesticks are making sense. Add in other factors, of course. Don't just blindly buy in as it hits those areas. But those are the immediate ranges that I'd look for. I mean, if you want some additional targets to the upside that have some supply and demand, it's going to get a little bit wonky when there's that huge catastrophic drop, because there wouldn't have been a lot of stops along the way, right? There was just that giant plummet. And so, I mean, just plotted all those price targets down here, but I mean, it's not really a great way to chart this. I think what I would look to do is, if it stretches up over that $45, $46 zone, just reassess it and see what it's doing more in that moment, and try to look for some chart formations or patterns that aren't necessarily tied to specific price points to the upside. Something like a channel play, like has it developed an upper channel that you could follow. Now, the most immediate thing that I would be cautious of while we're here is all of this topping out. This actually stretches back quite a bit. So I mean, this topping out has been going on since here. And this is all like just a really challenging, say, 50-cent zone or so. So I would continue to be very, very cautious around this area. I'll stretch this out just so it lasts for several more days. We can keep an eye on it. But yeah, that would be my biggest worry, is if it can't really break through this area, then it could get pushed down further, because at some point a couple of things are going to happen. Either it's not going to have enough buying pressure to push it back up into this area anymore, since it keeps getting thrust off of it, or the positive angle is that it comes up and it's consumed all of the selling pressure that it had back here. It had selling pressure, selling pressure, selling pressure. There's a lot of people happy to sell within this box, but at some point all those sells get sold, and those sellers are no longer there. They've moved somewhere else. Maybe they're up here now, right? And so that could pave the way for it to actually go pretty quickly through that box. And if it does, then that's most likely what has happened. Now let's take a look at the indicators before we quickly flip over to some of the data and take a look. Now we are getting what's looking like a bearish crossover, like the MACD is going to cross below the signal line and probably come down. Now that said, it is definitely overall picking up bullish momentum. You see this histogram area is much lower than this one. And you see how high this yellow line is stretching. That's the MACD line. On each of these bullish runs, it's getting much higher every time. That said, the bearish momentum, while not coming in as consistently in its like increasing direction, it has recently had a big bearish movement. So I would just be cautious of that. This next bearish movement will be very telling. What happens when this bearish crossover happens? Does the MACD come down maybe just toward the midline, toward the baseline, and then bounces off and comes back up? That would be the best bullish case scenario. That to me would probably be in line with something like it sticks itself to that 41.27 level, like very close to there, and just kind of stays there, and then makes its next run at that white box essentially. But I'd be on the lookout for the MACD to make a bearish crossover, and maybe be cautious if you're buying in too early there. RSI relatively high. This will sort of like line up with that bearish crossover on the MACD. When that comes down and tests the midline, which is the 50 mark on the RSI, so right about where my cursor is, does it bounce off and make a run toward overbought again? That would be a real sign of strength. If it comes down and can't hold the midline, it's likely going to push to or through into oversold territory, and then to my mind, we're sort of like back in the game of which way does this thing want to go. And with the MAs, bullish crossover here, 20 crossing over the 50. Now if it can push up and maybe the MACD doesn't really turn bearish, then that 20 could cross over the 200, would offer an additional bundle of support and bullish momentum there. That said, if the price does come down and hits this red MA, which is the 200, it should provide some additional support. So again, pinning itself right along that same price point around 41.27, 41.21, which is where the 200 is right now. So somewhere in that zone of a few pennies, it should try to stick itself there. And if so, that could be in line with the MACD just coming down to the baseline and then bouncing up, and the RSI just coming down to the midline and then making another run toward overbought. That's the bullish case scenario. Just keep in mind, it could absolutely fall through the MAs. It could fall through that 41.27. So keep an eye on it in the moment. It's just sort of what it's looking like to me, just kind of reading it prior to the fact. Now, this was 8.3, so I wanted to go ahead and take a look. I know we had, earnings turned out quite well. There's this article over here on Zacks that's second quarter earnings, 97 cents per share beats by a penny, but decreased almost 20% year over year. So sort of like a bit of a mixed bag there. Revenues beat the consensus estimate by 2.3%, increased 8% year over year. So that's a good sign. So, a little bit, the challenges persist for Viacom, that's for sure. On Ortex here, a couple of things to look at. One is, again, it's a pretty muted response from analysts at the moment. It's pretty mixed bag. But that said, even with that mixed bag, there's pretty solid potential upside returns. So to the degree to which, not that those analysts are correct, but that institutions or retail investors follow that and make trading decisions based on it, that could bring some buying pressure into it. On the flip side, insiders are deploying a lot of sale transactions, and so that's certainly killing the momentum from the insiders side of things. And on the short interest side of things, it's getting pretty close to 10%, which I know with the GameStop and AMC and those crazy situations doesn't seem like a lot. But historically speaking, 10% of the float being shorted was sort of attention getting. And then something approaching or over 20 was really, really okay, this is overextended. So you're going to have to fight some of the shorts here, it looks like, for the time being, because as the price is coming up and trying to recover, they're seeing that and jumping in and trying to manipulate it back down. So just be aware that they are here too, trying to play in the game. All right, well, good luck. I hope that gave you some ideas, some things to look for, but definitely be very cautious, watch these things very closely, and make your own decisions, at the moment for what you see, and take in a bunch of factors and don't just rely on one data point to guide you. All right, well, I hope you have a great weekend and an excellent trading week ahead, and I appreciate you watching. I will see you in the next video.